I can't find it. Can you find it? No? Wait, what am I talking about? The crash, of course. You know, the market crash that so many talking heads said that was coming by the end of this year? Well, here we are, end of the year, and real estate here in Atlanta is rolling right along. I will say this though, there are some surprising numbers I'm going to share with you today, but it's not what you think. So stay tuned as we look at national, local, and hyperlocal stats for Metro Atlanta, and we're doing it right now. Let's do it. Jonathan McCoy, Atlanta's real McCoy, back with you, taking an honest look at the national housing market and the real estate market here in Atlanta and the Metro Atlanta area. If you stay tuned to this video here, you're going to get numbers that no one else is sharing to help you make an informed decision when it comes to buying, selling, and investing in real estate. Up first, national data from Realtor.com for active listing counts in the U.S. This is the number of homes that are for sale and not under contract yet. For this year's data, you're going to see it shown with the yellow line here. Now, this is the graph that a lot, and I mean a lot of experts, were out there using back in June and July, trying to scare everyone into thinking that a market crash was inevitable. And yes, if you look at what happened from April to July, it did look a little scary. But what we have seen instead of a crash is a correction and a graph now that looks more like what we have seen in normal years that don't involve a worldwide pandemic. What we are seeing is similar to 2017, 18, and 19, and that is seasonality. The difference being we are seeing some market corrections, but nothing like a crash. At worst, we're just seeing a slight bump, not a crash. Like when you're sitting at a traffic light, somebody bumps you, you get out, take a look, don't see any damage, and everyone gets back in their car and goes about their day. Don't be surprised when you see this number coming down for December, matching what the market has typically done in previous years. Next up is a total listing count. This represents all homes that are on the market, whether they are under contract or still available. Once again, notice how similar it is to previous years. On this graph here, we see that the number of homes that are pending, meaning under contract, and to no one's surprise here, that we are down a lot from 2021. No doubt that the demand has gone down. The biggest takeaway is that we are just now resembling 2017, 18, and 19, and not the craziness of 2020 and 21. Of all the national info that I'm sharing, this graph may be the most intriguing and tell the biggest story. As displayed in the title, this is the number of newly listed homes, meaning homes that haven't been listed in the previous year that are now on the market. While we see this staying with the seasonal trend of other years, we also see that this is a much lower number than all the years displayed on this graph going back to 2017. I have emphasized over and over again here in 2022 that I did not think a crash was coming, and here was one of the driving factors. Inventory still remaining low because homeowners just are staying put. We have had a good economy with crazy low interest rates, lots of refis, and a lot of moving that has happened the last 2 years. Why move now unless you have to? Sellers are just staying put with their 3% interest rates and their houses that they're good with for now. I have spoken with many homeowners and they have said that they would love to move, however, based on the rates they have on their current home and the rates that we're seeing today, if they purchase the exact same house that they're living in right now, at the exact same price that maybe they could sell their home at, they would be paying $1,000 more per month. That just doesn't make sense for them. And obviously, if you're buying a home more expensive than the house that you're currently in, you'd be paying even more. Interest rates are causing sellers just to stay put for now. However, a few things are happening that could change that up. One, interest rates have come down some from the high that we saw a few months ago and now sit today around 6.25. Another thing that could change everything is hitting that like button so everyone else out there can see this valuable information I'm sharing with you. And lastly, we can see in this graph here showing the active listing count that the consumer is now getting used to these higher rates and that they are slowly getting back into the buying game along with the home prices starting to level out. Thus, we see the big increase in active homes from the April to July months and then the leveling out that we saw and the lowering starting in August. It took about 4 months for buyers to adjust to these higher rates. Now that we have seen some of the national numbers, let's take a look at single-family detached home numbers here in Metro Atlanta. Here we see a comparison from November of 2021 to November of 2022. As we already know, we have more active listings now, less pending homes, and less sold homes. This is not a surprise to anyone. We also see that the months of supply of inventory is now up to 3.2 months. While it is not surprising that this number is higher than the crazy 0.9 months of inventory last year, it may surprise some that we are still not even close to what we consider a buyer's market. The other surprise for some out there is that the median sales price that we're at. We're now at $420,000 for a median sales price in Metro Atlanta, which is 6.3% higher than this time last year. If we jump over to the 6-month trend report, we can see that this is the exact same median sales price that we had in October. Do we have a cooling down market? Yes. Do we see some seasonality? Of course. Do we see a crash? Nope. Though there is one number that caught my eye on this chart that we're going to come back to. Since we know that the previous 2 years were historic anomalies, what we can do is take a look at normal years that have similar numbers to what we're seeing now. And that's looking back at November 2016 and November 2019 and compared to this year. We can see that actives and pendings and solds are down. But we notice that the inventory levels are pretty close along with just about all the other numbers here except for days on market and sales price. Homes are still selling relatively fast and sales prices are much higher. Using this data and the historical normal years data, I think we can infer that prices will hold steady for the next few months and then likely start to increase again as we hit the early spring months of 2023. Barring any major national and international events, this is likely to happen. Okay, back to the chart here. I told you that there was a number that caught my eye. Take a look at the median list price and the median sales price and the median percent of sales price to original list price. As sales prices started to lower, we saw that the list price started to go down. This makes sense. Agents and sellers were adjusting to the market slowdown. But look at what happened in November. While the median sales price stayed the same, the list price jumped up by $5,000. What caused sellers and agents to bump prices back up for their listings? I think some confidence came back to sellers and their agents when interest rates started to go down some. And we are still seeing homes that are listed for the right price and in good conditions have multiple offers. There are still 32% of homes out there that are sold that are selling at or above the list price. I'll be curious to see what happens in the future months because even though list prices went up, buyers and their buyers' agents remained steady and did not increase their offers, thus the median sales price staying put at $420,000. Month supply of inventory for different price ranges can also tell a story. Across the board, as previously stated, we see 3.2 months of inventory in November. One indicator of a changing market, though, is looking at homes in the higher price ranges. We are now seeing inventory rise in homes that are listed at $900,000 and above. Other than the 1 to 1.5 million range, we are seeing a balanced market or even a buyer's market for luxury homes. We will certainly keep an eye on the luxury market as it can be one of the indicators that show either minor or major shifts coming. When I see these numbers, I continue to see a correction and slowing down in the market, but nothing that indicates the sky is falling. On to the local stats. These are numbers I pulled myself in the areas I most frequently work in to help give you an idea of what's happening in the suburbs of Atlanta, specifically in north, northeast, and east side of Metro Atlanta, to help you see if there are areas that are hot or ones that are cooling off. Starting in Duluth, Georgia, there are currently 91 active homes for sale and 41 new listings came on the market in November. These new listings had quite the drop from the last month, down by 29. Under contract is also down with only 34 homes going under contract, and closings had a drop to only 26 Duluth, Georgia homes closing with a median sales price of $419,000. Moving on to Peachtree Corners, we see only 35 active homes and 15 new listings hitting the market in November, which is 22 less than the previous month. And while under contract homes were down to only 10, closings for the month was up slightly to 19 homes closed for a median sales price of $540,000. While these were less homes under contracts and less listings, we also saw more closed homes. We will say that the Peachtree Corners market is lukewarm. If you're considering buying a home in either Duluth or Peachtree Corners, you may want to take a look at this video right here that compares these two suburbs. Up next, Norcross, Georgia. Here we find 43 active homes. Only 23 new listings hit the market, 25 homes went under contract in November, and 17 closed during this month. All these numbers are down. The only value that increased was the median sales price, which was up to $373,000. The Norcross market is cooling down for both buyers and sellers. Venturing on to Alpharetta, we find 167 active homes with 59 new listings hitting the market last month. New listings were down by 47 homes. 54 homes went under contract, which is down a whopping 83. But the good news is closings was up by 20 homes, with 94 homes closing in November. The median sales price for those homes was $621,000. While this was a strong month for closings, everything else was cold. I'll say that this market is tepid, heading towards possibly cooling down. Roswell, Georgia is our next suburb with 139 active homes, 69 homes hitting the market last month, and 45 homes under contract. 59 homes closed with the median sales price of $620,000. Most numbers are down for Roswell, but the closings and the median sales price are actually up. A number that sticks out here, as we are seeing in lots of other markets, is under contract homes were down by almost half of what we saw last month. Once again, we find a lukewarm market. Okay, Swanee, you're now on the clock. Swanee, Georgia, as of now, has 139 active homes on the market with only 39 new listings coming up last month. This is a big downswing from the previous month of 83 listings. 38 homes went under contract in November, and we saw 46 closings with a median sales price of $523,000. With a decrease in all the numbers across the board, I would definitely say that this market in Swanee, Georgia is becoming chilly. Does the Johns Creek market show anything different? The answer is no. Across the board, we see that numbers are down here as well. Active homes sit at 62, new listings in November was down to 29, under contract homes 21, and 16 homes sold with a median sales price of $758,000. It's getting a little frigid here in Johns Creek. Coming Georgia, can you warm us up a bit? Well, that's a resounding no as well. Active homes is actually up to 382, new listings is down to 152, but it's the under contracts that took the biggest hit. There were only 91 homes under contract in Coming Georgia for November, which seems like a lot in total compared to the other areas, but this is actually down by 112 homes compared to the previous month. There were 115 homes that closed in November for a median sales price of $545,000. There's a slight surprise as the median sales price is actually up from the previous month. While the median sales price prevented the Coming market from getting frostbite, it did have a large drop in under contract homes, which makes this a pretty cold market right now. We're going to end this look at hyperlocal markets with Stone Mountain. And just like most mountains, it's on the colder side of things. There are currently 199 homes that are active on the market, with 84 new listings hitting the market in November. 48 homes went under contract and 59 homes sold with a median sales price of $296,000. While we see that local markets are cooling off, this is way more seasonal shift than it is a major market shift. And while shifting markets affect it some, it really isn't that bad of a market. For you sellers out there, over these next few months, you need to have your house move-in ready, but be patient. I just had one of my listings go under contract that has been on the market for a few months. It's definitely move-in ready, but there were indicators that we were relatively close on price. It just took some time to get that right buyer in. So be patient. Buyers, you should be doing the same. Be patient. Right now, you can get a little bit better deal because of the seasonality and slowing down this market. Also, buyers be looking to buy down points or even getting sellers to maybe help you with a 2-1 buy down on your loan, which can help your interest rates on your loan for the first couple of years be a lot better to get you in that home. If you like this video, you should definitely check out this one. And be on the lookout for my 2023 predictions video, as well as other videos about living, working, playing, and breathing all things Atlanta and the metro Atlanta area. Thanks, and I'll see you next time.